So now let's consider a different situation. We have a conventional insurance company and we apply a certain intensity of regulation and supervision to those companies that's proportionate. We might have a micro insurer that has a much lower risk profile because of the nature, scale, and complexity of the business that it does and its threat to our objectives, particularly of financial security and stability. That could be because they have a large number of policyholders, but very, very small sums insured. So they're unlikely to face a situation where one large claim will create problems for the company, and they have much more pooling of risk with a large number of policyholders. That would then mean that we could consider their risk to be lower when it comes to that particular issue. The result would be that we could reduce our intensity of supervision in taking into account that risk to a more proportionate level. But there's a minimum that we can only go to. We can't go all the way to the very bottom. And one of the reasons for that is that there are administrative minimums that have to be followed. The insurance companies have to have some basic elements, and you simply can't operate an insurance company without them. So there's a certain basic set of requirements that have to be in place for any insurance company, regardless of its nature, scale, and complexity. And equally, there could be a technical minimum. In other words, there could be situations relating to the insurance itself where you just can't get too small. For example, if you only have 10 policyholders, you're not going to get that pooling effect that insurance relies on. So it's not much benefit from a technical point of view having that number of policyholders. So there is a zone down the bottom here where we just can't go. But otherwise, we can reduce our process quite a lot.